It amazes me how many traders overlook this simple strategy. And what we're going to look at is hedging. Now, hedging can mean many different things for many different traders, right? Because there's many ways that you can hedge. But I'm going to show you a very simple methodology that I use with every single one of my trades. And ultimately, what it does is maximize profits and minimize losses. Okay. Now, I'm actually going to take, later on in the vid, I'm going to take a tutorial from our VIP Discord, and I'm going to share that with you. But before I do, guys, we need to understand how I hedge, right? So let's start there. We're going to look at how I hedge. We're then going to look at the pros and cons, and we're going to help you make a decision as to whether you want to add hedging into your trading system or not. All right, so first of all, let's take a look at how I hedge and what I mean by hedging. So firstly, let's understand how I hedge and why I hedge, right? Why do I think this is such a powerful tool? Let's understand that. Now, to understand it, you need to understand my entry, right? So let's understand that first. Now, any entry I have, I want to be with daily trends. So this is Aussie dollar, US dollar. This is the daily chart. And I've put this blue line in, right? Because this is the point where we break these highs and this becomes an uptrend. Okay. And at that point, it continues to be an uptrend, right? Just following structure. If you haven't checked out my price action video, guys, go check that out. This explains structure and trend. But we are in an uptrend all the way until we break that low, right? So from here to here, right, I can look for buy trades, okay? So I want to be with day trend. Now, the second thing we need to understand is my entries, right? So normally, guys, I enter on H4 and or H1, but let's drop down to the H1 just to keep it on one time frame and we can understand. So in all of this price action, right, I'm looking for the same entry and I'm looking for a buy, right? And my entry, okay, so you can see that blue line, guys, that's where we had that big bullish candle on the day chart, right? Breaking these highs, that's when that day trend starts. Now, what I'm looking for is this, right? If I just show you this level through here, right? I am looking for a piece of price action where I see price creating a level, right? So you can clearly see this has become good resistance. Then it breaks that level, it retraces, and then what was once resistance becomes support. And then we get a nice bullish candle, which we see here, bouncing off that level. And for added confluence, I like to be above the moving average 20, right? So this tees up. This is a pretty textbook A1 setup for me, right? Now, at this point, okay, let's zoom in. Let's put in a couple of levels. So I'm going to enter on this bullish candle. Okay, and I'm going to put my stop loss below this swing low here. So I'm going to give it a little bit of room. I'm going to put my stop loss down here. Okay, so I've marked them on the chart, guys, because this is where I entered the trade. This is my buy. And this is where most people would have a stop loss. But at this point, I am going to have a sell stop, not a stop loss. And this is how I hedge. So let's say we buy one. If price goes against me, I will sell one of the same value. Okay. Now, let's just say for argument's sake, my target was up here, right? So I'm looking for roughly 1:1. So let's say my target was up here. Okay. So let's zoom in. There's my trade, right? It's set. I've entered. I want price to come up here and hit that, or worst case scenario, it will come down and hit my sell trade, not a hedge, not a stop loss, sorry. Okay, and as you can, sorry, just drawing random lines. As you can see, guys, right, this trade doesn't work out. Okay, so you can see we tried to come up, price actually broke structure here, right? But price continues to come down and bang. At that point, I am entered into a sell trade, right? So I bought here and now I am in a sell trade of the same value. So I am holding this as a loss, right? And it will be 1%. That's my risk management. And I will just hold this 1% loss. I'm still in it. A normal stop loss would mean you're totally out of the trade, right? And you've lost 1%. But I will hold this trade open with a buy and a sell until I get another setup, right? It's as simple as that. So hedging allows me to have another bite of the cherry, right? So to speak. And remember, guys, in all of this price action that I'm showing you, I'm looking for a buy trade. I'm looking for buys because we're in a daily uptrend. So let's just follow price action, trend and structure. All right, so this is where we're at. Okay, so this is coming down here, right? And then we can see a new level forms here, right, on the H1. So if I put this level in, and remember, guys, if you remember my first entry up here, I'm looking for a break of that level, comes back, retests it, nice bullish candle, away we go. It just so happens that trade didn't play out, right? But let's zoom in on this trade now, right? You can see I have the same setup, right? It's proving to be good resistance. We break it, we retest it, we get a nice bullish candle. Okay, so it doesn't matter what your trade entry criteria is. The idea of hedging is the same. If my first one doesn't work out, let's see if my second trade works out. Now, at this point, right, I'm going to draw this in again, right? I will close this sell trade, right? Because remember, I don't want to look for sells. I'm looking to buy the market, right? And at this point, I will close this sell trade at this point because it's a new setup. It's a buy setup, right? So at this point, all the way down to roughly here, I have made profit on this sell trade, okay? That is profit on the sell trade. And I've closed it. But remember, I'm still in this buy trade all the way up here. Okay? Right? But my target is still the same because I'm with the day chart, right? And then I still need to protect myself, right? I'm not using a stop loss, but below here, I will put in a new sell stop. Right? I need to protect myself. I've closed this sell stop over here. I need to put a new sell stop in here. And this was a buy one. This will be a sell stop one again, right? And I've taken profit on the way down. And then I'm just looking, you know, for this trade to play out as well, right? And then if we just play things along, right? Now, you've got some great options, okay? Remember your buy trade was up here, right? And now you've taken all of this profit here on the sell trade. Now, even if you just hold this trade back up to the buying level, right? You have a profitable trade, even if you got out of break even, right? And at no point did this trade break structure, okay? Right, and then it breaks down again. But that's my point, guys, right? It gives you another option to enter the trade. Now, just to recap, if we just let this trade get stopped out, right, that would have been a losing trade minus 1%. Okay. Now, as it happens, we didn't do a stop loss and we hedged and we started selling all the way down to here, right? And then we closed that sell hedge. Now, if this was 1%, right, then this was also roughly 1%. So we made 1% on this sell trade, and then it come back to break even. And you've got decisions to make. You can get out at break even, you could perhaps let some profit run, etc. But you can see we turned a losing trade back into a profitable trade if we close this at break even. And while the market is in this uptrend, I will continue to do that, right? I will continue to do that, looking for H1 structure breaks, right? And just keep following that system. If we go back to the day chart now, right, you can see, right, eventually, right, all the trades, because we're with the day chart, right, you could have potentially left some of it and we would have had a really nice trade. So that is why I hedge, and that is how I hedge. I have the same trade entry. I take the first entry. If it doesn't work out, I hedge, and then I wait for another entry. You do need to be careful, guys, with, increasing risk, right? Every time I move my sell stop, my hedge, I'm increasing risk, right? And you've got to be careful of commissions. All right, but I just wanted to simplify what I look for when I hedge. Now, guys, we're going to look at, the positives, some of the drawbacks, and we're going to look at some examples that I actually shared in the VIP Trading Academy. All right, so let's go check out that video now, and it gives you real live examples again. Hello traders, Trader Tom here from Simply Forex, the channel created to help you succeed at trading. In today's tutorial vid, we are going to look at the good, the bad, and the ugly of hedging. Okay, I'm not talking about ex-girlfriends, we're talking about hedging. And the good, the bad, and the ugly is also an excellent Western film starring Clint Eastwood. Check it out. But let's focus on trading. So yeah, basically we're going to look at pros and cons of hedging, guys. And if you stay till the end of the vid, I'll show you exactly how I hedged my trades this week. So I decided to do a hedging vid because we found ourselves in a couple of hedges. And as you can see, these are my trades from my VIP Trading Academy. So we're going to look at Canadian dollar, Swiss franc sells, yeah. Look at the entries, the stop loss, hedge position, etc. But they're all mapped out on my charts, which I'll show you in a minute. We got hedged in that trade. I closed the hedge, etc. We're going to discuss all of that. That's more the bad and the ugly. And then we're also going to look at this trade as well, euro pound. Okay, and again, please check out entries, hedge positions. This also hit the hedge as well, and we're going to see how I've managed both of these trades. This is more of the good. Okay, so let's get rid of them now. You know the trades that we're talking about. Okay, and we're going to look at these on the charts to make sense of them. So let's start with the bad and the ugly. So Canadian dollar Swiss franc was a sell trade, and with hedging, right, let's make this a bit bigger. With hedging, right, the number one rule, like top rule, is we must be with day trend. Okay, and as you can see, guys, we are with daily trend. Okay, we were getting lower highs, lower lows. I will only hedge with daily trend. Okay, this was in a downtrend. Okay, so check, and look what's happened here. Come down and hit our higher time frame target, but we will look at this in more detail in a minute. Now, if we drop down to the H1, right, and I'm going to get rid of this big price action on the left so we can actually see the chart, right? And I'm just going to, discuss my trade, okay, and how I got hedged. So if we follow H1 structure, there was this
big move down, you know, breaking these lows over here. And I just waited for a retrace. And as you can see, this is S1. This is my first sell. Okay. And I started selling with a view to price coming lower. And what happened is it hit my buy order here. So most people will put, where I've put my buy order, will have a stop loss here. Okay. And price will hit that stop loss and the trade will finish. The trade is over. We are done. Okay. And there's nothing wrong with that either, guys. You know, as long as you protect yourself. If you use a stop loss, no problem. That is a good idea. Or we can use hedging, which I'm going to show you now, which also protects us and is a good idea, right? They both offer protection. So yeah, I entered here with a view to price coming down. It didn't. It come up and it hit my buy hedge. All right. Now I'm in a loss, and this here is the equivalent of 1%. This is important so we can gauge our risk as this trade continues. So that's 1% risk. All right. So I'm carrying a 1% loss. And then this area here is where I closed my buy trade. Remember, my bias is to sell. So I don't want to be in a buy trade. Okay. I want to be selling. So why did I get out of this position here? So if we go to the H4 now, it become a bit of a H4 play. So excuse the writing, guys. It becomes a bit distorted. But this big H4 candle here, right, bouncing off of this level here, seemed to me like an excellent opportunity for me to get out of my buy trade, right? So when price retraced a little, you can see this yellow line. That's the yellow line I pointed out on the H1. I closed this buy order, okay, and put a new buy order here above this last high. So let's go back to the H1 so we can see that more clearly. Okay, so this is where we're at. All right, so because of that H4, I closed my buy hedge here, right? And at this point, you have to understand, I have closed basically half of this 1%. So I have closed a 0.5. I have taken 0.5% loss at this stage, okay? Which I was fine with because I still, you know, on the back of that H4, you know, it told me that price could come lower, right? It didn't. Okay, so now, like I said, this was that last H4 high, a few pips above. I've put a new buy order, still at the same value of this sell order, above that last H4 high, right? So price action, it almost comes up, it almost hits my stop, and then it comes crashing down a bit. And I'm thinking, okay, great. Tom, you're a genius. It's coming back down now. You know, we're going to make a nice profit on this trade. This happened. Okay. So at this point, right, you have to understand your money and risk management. The trade has gone against you further. All right. And this can happen in hedging. Okay. So now what's our risk now? So remember, I secured this 0.5% loss, yeah, earlier on. But now this original sell in here and this buy order up here, this is now at roughly, let's say, a 1.3% loss. Yeah, if this was 1%, yeah, this is now 1.3% back up to here. So right now, I am in a, once this buy order here gets triggered here, I am at a 1.8% loss on this trade, which is absolutely fine in terms of my risk management. Yeah, mine should be about, I won't go any higher than 3%. 3% is like my puking point, and I will just close the trade. All right, so this is where we're at currently. right? So the hedge is not going in our favor, you know, but we need to manage it from a money management point of view. Okay, now that's bad. Now the ugly, yeah, with reference to my, you know, original good, the bad, and the ugly, is this, guys, right? So this point here, remember, I am still looking for sells. The day chart is still in a downtrend. Nothing has changed on the higher time frame, the day chart. Okay, but obviously we're going to get movements on the lower time frames, which is what we're seeing. Now I'm hedged, okay, at a 1.8% loss, right? But now look at this last H1 swing low here, right? If I take all of this away now, because you know where we're at, okay? This is closed, this is open, and this is open, and we're at a 1.8% loss in terms of risk. All right, but it's not lost until I close the trade, which is the beauty of hedging. You can continue to manage the trade. Now, looking at H1 structure, right? Okay, if price breaks that level, I'm interested. Now, if we zoom out now and go down to this crazy price action, because everything gets a bit distorted. So that H1 area here, I would have closed this buy trade. Yeah. So let's say price came up. Let's say we got a nice bearish candle. Let's say this one was bearish and it closed here. Right. I would have closed this buy trade and put a new buy order above here. Okay. Again, further increasing my risk, but still within 3%. All right. I would have, you know, closed that buy order and then it would have come crashing down. And this original sell over here would be nicely in profit. You know, hedging's the holy grail. I'm a genius. Everything's wonderful, right? But that didn't happen. What has happened is this, yeah? I wasn't awake. I have woken up to price down here. Yeah, and I was thinking, price, what's happening with the markets? And basically all the flight to safety currency pairs have gathered strength. Right, and Swiss franc is one of those. So now, once price gets down to here, you know, and it's hit this is a weekly support level, this blue line. The trade is just kind of over for me. All right, so I have actually closed this trade for a minus 1.8% trade loss. Sorry, yeah, minus 1.8%. All right, which is not what you want, but it's okay. It's well within my risk management. The trade has just gone. Yeah, there's no value in this trade anymore for me. Yeah, it's hit the higher time frame target. We'll see what happens from here. So that's it. This is Canadian dollar Swiss franc. This is how I have finished my hedge. All right, minus 1.8%, roughly. Now, that's the bad and the ugly. Okay, and I would have gotten out of this trade, but shoulda, woulda, coulda are the words of a fool when it comes to trading, and that's also a song. Now, let's look at Euro Pound, because that was the next trade we were going to look at. All right, and this is in real time as well, and you know, we don't know how this is going to pan out. Yeah, we'll keep an eye on it, right? But again, if we start with the day chart, I am with trend. Let's get rid of that. Rule number one of hedging, right? We are in an uptrend stroke range. So for that reason, we are with trend. Yeah, these are the last lows of the range. These are the highs. We're in an uptrend stroke range. It makes sense to look for buys from here. Okay. We've got a nice big bullish candle. A wick bounced off that level. You know, everything's telling me to take price back up to here. All right. So we're still with the day chart and what it's telling me we must be in order to hedge. I would not hedge against trend. You could be in a world of hurt. All right. So this is Euro Pound. Now, if we drop down to the H1, let's now look at this hedge. All right. So let me get rid of some of this. Yeah. Okay. Let's zoom in here. Now, after this big move, yeah, I said, as soon as we get a bullish candle that forms above the moving average 20, I will look to buy it. Okay, I did. I bought it here. Okay, trade broke this level, which is where my hedge was, this sell. And remember, these are at the same value. So B1, let's say this is one lot, my sell will be one lot. All right. Okay, so they're the same. Now, this buy idea didn't go according to plan on the H1. It's come down and I'm now in buy one and sell one. Okay, and again, that is 1% of risk. Okay. Now, price has come down. We're in a H1 downtrend at this point, okay? And price got to here. Okay, so this next line here, why is this important? This is where I closed my sell hedge. All right, this is where I closed my sell hedge. Okay, I then put a new sell hedge down here. So why did I close this sell hedge here? And in this scenario, this sell hedge is like 2 pips in profit. But if you take out commission, it's break even, right? Why did I close it out here? If we look at the H4, you can see that was because of this H4. Look at H4 structure. That was because of this H4 wick that bounced off of this support. Yeah. And I closed this sell order on that candle. You know, with hedging, I'm still trading price action and the chart. Nothing changes. That's what I'm looking at, right? So that's why I closed it. It was a H4. So if you think of it like this, guys, the H1 trade didn't work out, right? But now the H4 trade, so far, yeah, it could all change. Looks like it's working out, right? Okay, we shall see. And my target is still up here. Okay, so we go back to the H1, right? I've done a couple of things here. So I close this sell hedge here for a small profit. Let's say, just say break even. And I move my stop loss, my hedge, sorry, down to here. Okay, this is still a sell one, right? And I'm in this trade, right? I've still protected myself. So this was 1%. From here to here, and this has become roughly another 1%. So if price had come down and taken out of this sell order, I would be at -2%. Again, within my risk parameters when it comes to hedging, no problem. Yeah, 3% is my let's get out of here number. All right, but now price action has developed. Okay, price action has moved up, right? I've also seen a H1 structure break. So we're breaking these highs in here. We even just about broke this high with this candle, right? Then price retraced a little. Let's get rid of, let me get rid of all of this now, right? Okay, so we've got a sell. This is closed. Yeah, this sell order here hasn't been triggered. Right, now we're in this H1 uptrend. It's broken these highs, this high, and even this high just. So when I see this candle, you know, I like the entry. Yeah, my euro pound idea is still to buy because of the day chart. I still like the entry. And there's a bit of a level through here. I haven't actually drawn it in, but there's a bit of a level through here. Okay, so when price retraced to this level, I did another buy. Right? So now I'm in buy one and buy two. So therefore I need to adjust my sell hedge down here. Now my sell hedge, I have moved up from here to here. Why did I do that and move it to there? Well, this for me here is the last swing lows in here. Right, this could potentially become the new swing low, and I'll move my stop up again. We shall see. Right, but this was the last swing low on the H1. Therefore, I have put a new sell stop sell hedge here. But this time it has to equal buy 1 and buy 2. So this is what this means. Okay, it has to equal the same as the buy. Whatever lot amount you have as a buy, the sell stop should be the same. And this is where we're at, guys, right? So, you know, if this carries on up and hits target, yeah, we'll see, right? The target's up here. I will then make, you know, a little bit over 1% on this buy and a little bit over 1% on this buy. All right. So, you know, potentially, you know, 2.5% profit up here if it hits target. Okay. And you know, and it's an if. Yeah, this trade hasn't finished. If it comes back down here, right, you then need to understand the risk. Okay. So remember this plus this. Now we have to add this. So this is a little bit under 2% with this trade. So let's say this is roughly 1.8%. But now we've got buy 2, and this is 1%. So if this trade came crashing down and went against me, this entire trade would be minus 2.8%. All right, so you really need to understand that. You need to keep tight control of that money management and risk. And I'm fully aware of that risk if price goes against me. I'm not just adding to a trade willy-nilly, right? I have to have tight control of that money management. All right, and we'll see what happens to this euro pound trade. All right, so guys, yeah, I wanted to show you that because we've had a couple of hedges this week. If you've got any questions, please ask. And please don't forget to subscribe, like to the channel. All right, guys, hope you enjoyed the tutorial, and I'll see you next time. So, guys, I hope that gives you a good insight into hedging, and if you think that could potentially be a useful weapon in your trading arsenal. And if you do, and you would like to delve a little bit deeper into hedging, then please come join our VIP Discord channel, guys. We've got loads of tutorials in there that explains it in even further detail. All right, check out the links below. Don't forget to subscribe, like, and share. See you later, guys.